Hi, Jeff, Zach. How are you doing?
Hey,
Hey,
good to see you,
Steve.
Steve.
Hey, good to have you on board. Housing market outlook. We're still looking at fairly high elevated mortgage rates. Home prices are pretty high. Pretty low housing stock. Some of that's we talked about the golden handcuffs of some people being in low fixed rates and not wanting to leave those behind. But it's all adding up to a pretty tough U.S. housing market right now, and I think a lot of folks are expecting that to, at least in the near term, those conditions to kind of continue. Some of your thoughts in terms of being expert real estate investors, in
I,
terms
Well,
of what we're seeing
this
on
this
the
one hits
residential side.
this one hits personally, I think, for both of us. And
yeah,
I'll let Jeff speak to himself, but I mean, um, with my ever-growing family, and I've wanted to kind of transition to a bit more space. There's hardly any houses in the range that I'm looking in. The ones that are there are no good. There's literally no supply, and anytime a good piece of property comes out, you still have in 20, 30, 40 people putting offers, and you have bidding wars. Um, I don't know when that changes, but I'm seeing that personally that it's a bloodbath out there, especially
well,
the good stuff.
I'd probably take it a little bit further. It's like even the new stuff that's coming online, it's cookie cutter bullshit that nobody really wants. It's difficult to live in those neighborhoods because they're associations, and where you look at you look at associations from the past where it's 100 or 200 bucks a month, and people are living in $1 million properties paying 200 bucks in association fees, and then you go to something that's $400,000 or $500,000, and you got $500 or $600 a month in association fees.
Yeah.
And that's a big massive increase, and I guess really to be equitable on that side, it's the larger homeowners, more expensive homeowners are paying for more and getting less from the association, whereas the other ones theoretically are getting more and paying more. But that's something you got to weigh. And I,
Um,
Yeah.
I would I'd also add one other side to this is, there you made mention of the interest rate, and I think that there's a side of where people are very short-sighted and they're seeing interest rates of what they were prior to the interest rates increasing. We're still not, where interest rates were, 15, 16 years ago. Um,
I can speak to you. You mentioned HOAs, and you didn't mention something that you showed me, where there was a house that was twice as expensive with like a 500 a month HOA, and then the house that was half as expensive, the HOA fee was 3,400
yeah,
a month.
yeah,
That's insane. But in terms of the interest rates, I've seen the same kind of thing. Like I've got a great interest rate. I've got a 3% interest rate. If I went to a 6.5 interest rate, my payment more than doubles. You would think it would be about double. It's actually more than doubles. So I'm buying half the house or less than half the house because of those interest rates.
for sure.
I don't
But
I don't
that's
know if
also
that
kind of a
helps, but maybe it loosens up the supply side a little bit.
Well,
yeah.
let's yeah, I think this is an important data point too, is just the affordability because it's not just the interest rates, right? It's also insurance costs, it's other expenses. We've come into this building costs if you want to do repairs, improvements. So right now, one data point is expenses are eating up more than 32% of the average national wage. And common lending guidelines look for that when you put in the mortgage payments, the property taxes, the homeowner insurance, that to be 28% or less. So we've got a real affordability issue in this country. And what I'm hearing from you guys is don't necessarily expect that to get better anytime soon, but.
I
I
mean,
don't think it
I
will.
wouldn't say. I mean, I would say it's sticker shock in a lot of ways, right? And yeah, I don't really expect it to get better, but I saw a video the other day where let's just call him a younger generation without naming any names, and he said, "In what world is a 9% interest rate on a car loan a reality?" And in my mind, I immediately thought, well, this one that wasn't abnormal, and I mean even as early as the 2000s, that was norm. I think people just have to get used to it. And I think the other side is people who want to sell their houses and have viable houses that they can sell. they are either going to get a cash buyer that can do it, or they're going to have to decrease the price so that somebody who really wants to live there and can live there and may provide more options for them to sell it are going to have to decrease the price.
Good luck.
Yeah, I know. But
Yeah, I mean, I think it's going to stay challenging out there, especially for young people. I think we're going to continue to see an investment opportunity in multifamily, especially areas where there's strong demand and limited supply. And that limited supply, it's expensive to build, even if there's areas to build. So, I guess good news for investors is these trends you can make money on. The bad news is if you're a first-time home buyer, if you're a younger person, I think this is just going to be a tough market for you for a while.
yeah, I mean, look, it's this reality of why we are in multifamily, right? When you're talking about the average cost of a house across the United States is, 3,000 to 3,500, but your average cost to rent a unit is 1,800 to $1,900. I mean, that's a large gap where you're saving on your income for the other stuff you like to do.
Well, I'll leave you with one last point is interest rates coming down. You're going to have more supply, but you're going to have a lot more competition too.
Yep.
And, I think the competition and demand will outstrip the amount of supply that will loosen up. But there is one little piece, silver lining, if you will. A lot of developers we've talked to, they're sitting on projects right now that they want to get out of the ground. And I mean, tens of billions of dollars. And that's all over the country. So when you add it all up, it's hundreds of billions of dollars waiting to go. All they're looking for is a relief a little bit on interest rates. And within 12 to 24 months, you're going to see a lot more projects come out of the ground, a lot more stuff that is going to exist that could also substantially help. So interest rates coming down might not help the first-time home buyers, but it could help get rid of some of that supply logged in.
Yeah.
Okay. Thanks for the insights, guys. If you enjoyed this, give us a thumbs up. Subscribe if you haven't. Checked out our website, selectfincap.com, to learn a little bit more about us and maybe get access to exclusive deals. Thanks a lot, gentlemen.
Thanks,
Thanks,
Steve.
Steve.